I see vintage in your future. Good morning, everybody. Welcome to Zoe's Treasures. My name is Tracy, and we're pushing buttons over here trying to get the right thing to show on the screen. My name's Tracy. I'm here with my husband, Noel, and this is our monthly chat show where we talk all things tax and accounting for resellers. If you're not a reseller, that's okay. You're still welcome to be here, or you're just thinking about being a reseller. It doesn't matter. As usual, I don't think I put it in the show notes, but my normal disclaimer, everybody's tax and accounting situation is unique to your own set of facts and circumstances. So the goal for the chat show is not to give personal advice, as I really can't do that, but I am talking concepts, theories, kind of best practices, just general practices. Always happy to answer questions too. So I do have a few notes of things to talk about, but if you have any specific question, anything, I will do my best to answer it. Please feel free, if I can talk today, throw it in the chat. And you know, I'm watching chat down here, so I'll answer it as fast as I can. So let's see. Last show, I did what I want to talk about today mainly is on the last show, we had talked about inventory. We talked a lot about inventory and selling items and then getting a 1099K and then reporting that income. And one of the things we talked about is where you get your inventory. So a lot of us as resellers, we will go to auctions or thrift stores or garage sales or estate sales or, you know, those various types of sources. And there's multiple ways out there. And that's great. And that's purely inventory. That's for your business. But then the other thing came up, which I do see a lot on Whatnot, because you hear people talking, you know, you hear them say, oh, this was from my grandma's estate, or, you know, this is something I've collected for a long time. This is from my personal collection. And those things are handled a little bit differently. So in the last show, I had told the person that was asking some questions that I would talk about selling personal collections and inherited collections today, which are a little bit different than your standard business. So just kind of recap on business. You have your general inventory, you sell it. It's part of your cost of goods sold, and it's just kind of your standard business practice. But when you have personal items, and they kind of fall into two buckets. So personal items would be what you own. I bought a pretty bowl. I put it in my living room. I really liked it. I thought I was going to keep it forever. After a while, I just started doing Whatnot, decided, you know what, I'm going to sell this. It's time for me to redecorate. I'm going to take some of the stuff I have in my house and I'm going to put it into my inventory to sell. So you have that type of stuff. You maybe have furniture or cars, because this isn't just for Whatnot. If you're a reseller, maybe you're selling on some of the other platforms where, you know, you're meeting people to pick things up. You have an old dresser, you sold an old dresser. So you have personal items. And then on the other side, you have inherited items. Or your own large collections, collectibles, and we'll define that a little bit more. But so inherited items, you know, unfortunately, grandma passes away. She leaves you a house full of, you know, her lifelong possessions. You go through, clean the house out. Some stuff you sell, some stuff you donate. Some stuff is, you know, well, it's no good, I'm going to throw it away. And then maybe you end up with some stuff you're like, you know, there's some value in here, but it's not anything me or the family really want to keep, so I'm going to sell it. So those are your inherited items. So I'm going to talk about kind of both of those and the end accounting for those, and how you would report those on taxes. So let's start with the personal side. Stuff that I own. You know, I bought it to decorate my house, decided I'm kind of cleaning up my house. And there's kind of two ways to go about this. If this is really, you know, something big that you've sold, a piece of furniture, maybe on another site, because I don't think Whatnot is doing much, you know, the big furniture type sales, but like a piece of furniture, a vehicle, you know, maybe just something you had of value that fetched a few $100s, but it really wasn't a collection. Maybe you have 3 or 4 pieces of Murano glass, or, you know, something that's expensive, or maybe a fur coat that you've sold. Those things can be, at the end of the year, accounted for 2 different ways on your taxes. So the first is by putting it on what's called a Schedule 1, which is just another form that's attached to your 1040 tax return. Um, and the key with this one is, though, it is not deductible. So any loss is not deductible. You have to, if you have a gain, you're taxed on that gain. But for those personal items, the IRS does not allow you to take a loss. We do have a question. Let me see really quick. I am on display. I was given a ton of stuff. I had to rent a storage unit and started selling on eBay. How does that work? I think it depends on when you say you were given a ton of stuff. Like, was that given to you for a business purpose? Like, hey, I know you sell here. Take this stuff, sell it. To me, that's business. That's inventory. You would value it as normal business. Since it's not something that maybe you have collected over the years or was inherited. If it's an inheritance, we can talk about that. I'm going to get to that in a little bit. So, personal items, I have 2 or 3 pieces of nice glassware. I have a fur coat. I have a car, a table. At the end of the year, you've got to report the income on that. The income can either be reported on a Schedule 1, which again, is just a form you attach to your tax return. If you make a gain, you have to pay taxes on that gain. If you take a loss, the IRS says, nope, sorry, those personal items, you don't get to deduct a loss. You basically zero it out on that Schedule 1. You put the amount that you paid for, or the basis in it, the amount, and then you make the amount you sold for the same. It adds to a zero. Nothing happens if you take a loss. If you take a gain, though, you've got to report that gain. The other way to do it, and there's 2 ways if it's a personal item, is on that Schedule 1 or on what's called a Form 8949, which flows to a Schedule D. And I know it's a lot of like tax talk there, but basically it's a form where you report long-term and short-term capital gains or losses. So for those personal items, you get a choice. You get to do it one or the other. But the bottom premise of it is if you make money on it, you got to pay the taxes. If you take a loss, you don't get to deduct it on personal items. Kind of sucks, but it's the way the IRS does it. Now, which form should you use? That is one of those things that's unique to you in your situation, and that's where I say you always should have an accountant, bookkeeper, or a CPA, somebody with that background, skills, and knowledge to help you walk through the specifics. So what I can give you is kind of, hey, here's some options. Now go to somebody who knows your unique circumstances and let them help you walk through that and make the best decision. So how do you know, like, let's take a step back. I just go and sell a dresser, sell it on one of these other sites. If I sell it for, $500, it doesn't meet the threshold. I'm not going to get a 1099K at the end of the year. Nobody knows about it, right? True. The IRS isn't going to know about it because there's no 1099K. You still need to report it, and your reporting options at the end of the year on your tax return are still the same. Now, what if I was cleaning out my house, I'm totally redecorating, and I actually sold enough furniture to trigger a 1099K. Or I sold enough, household goods. I'm cleaning out my kitchen, I'm cleaning out my living room, and you know what? I'm just going to town on whatnot, and I'm selling all these items, but they're all just things that were mine. They were just my stuff over, my life that I'm redecorating and I'm getting rid of. And I meet the threshold and whatnot sends me a 1099K. This is what you would do. You would report it as personal items sold. Now, there's a little caveat to that because the IRS is never, super clear and nice and easy. There is a little caveat where the IRS says you don't have to report your general garage sale type of stuff. But what they mean by that is, like once a year, your community holds that community garage sale, or once a year you just decide to throw everything out on the front lawn and have a sale. That's the type of thing that Whatnot's like, yeah, I don't care. Or not Whatnot, sorry. The IRS is like, I don't care. You don't have to report the income from a random garage sale you did. We're not going to go and monitor that. But that doesn't include, hey, I'm going to sell all this stuff on Whatnot on a regular basis. I'm going to set up shows. I'm going to enter it into the system, into the Whatnot system. People are going to buy it. It doesn't kind of disclude that. So you got to make this kind of general consensus yourself. So if you just have a few things you're selling in a garage sale, don't worry about it. If you're taking all this stuff and you're throwing it into Whatnot, all your personal items because you're redecorating or just cleaning out your house or downsizing, whatever it may be, that becomes something that you're probably going to end up having to report if you make a gain on it. So I mean, I can't say one way or the other, but that's up to you whether you make money off of it or not. And that all comes down to how you price it for your personal items. Just to make a distinguishment, personal versus the business. Again, keep in mind, business items would be those things that you buy with the intent of selling. Now, I buy stuff with the intent of selling it. You know, I go to auctions or whatever, and sometimes I see something pretty, a piece of art I want to hang on my wall for a while. Just because I hang it on my wall to store it and enjoy its beauty for 5 months while I list it until it sells, it's still a business purchase. Just because I'm enjoying it hanging on my wall doesn't make it personal. That's still business. So it's kind of the intent behind it. When you actually purchase something knowing, hey, I'm going to end up selling this, like I'm buying it to sell, that kind of falls into that business category. So that's kind of the personal versus business. But what about all that stuff you inherit? You know, unfortunately, you know, grandma or grandpa or great aunt pass away. They have some beautiful collectibles that they want to pass down. And we're going to talk about collectibles in a minute because the IRS is pretty specific on what they consider a collectible. But they pass this stuff down to you. That's an inheritance. So things you inherit and then you decide to sell. So you get all this stuff from grandma and, you know, it's beautiful, it's gorgeous. You don't want it to go to waste. You know, it has some value. So you're going to sell it, no matter what that is. Those are taxable. Oh, and we have somebody who unlocked bronze just by hanging out and watching our show. Thank you so much.
Welcome to bronze level.
Those are taxable. So those inherited items. And they are taxable under what's considered long-term gain or losses or capital gains and losses, which could be long-term or short-term. The difference between long-term and short-term is the amount of time that it is in your possession. So if it's shorter than a year, if you've only had it for a year, it's considered short-term for tax purposes. If you've had it longer than a year, so it's been over a year since you inherited that item, it's considered long-term. Taxes, the rates on that vary. There's kind of standard rates, 0, 15, and 20%. And that, again, what your tax rate is or how much you're charged for those long-term or short-term capital gains all go back to your personal kind of circumstances. So the whole big picture of your taxes are considered as whole before determining that 0, 15, or 20. So there'd be no way for me to say, oh, person A is going to be 20 and person B is going to be 15. It's really an individual, complete picture of your tax that determines that. But with your inherited items, you can take a loss on these. So it could be a gain or a loss. And let's see. So knowing kind of where you're looking at it, but the loss, keep in mind, I kind of take a step back, the loss is under certain circumstances. So remember before I said when it's personal items that you're selling, not the inherited stuff, but it's personal stuff, losses are never allowed. For inherited items, there are certain circumstances where a loss would be allowed. I'm not going to go into those. It gets very detailed, very complex IRS rules. That's one of the situations where you would need to go to your CPA or accountant. Mainly the message I want to give today is just knowing that it is out there. There is a possibility of taking a loss on those. But what do you need to know? So grandma gives you this, or you inherit this stuff from grandma. What do you need to know before you sell it? The number one thing you need to know is the basis. And that means, what's the cost of it? Okay. And it's not what grandma paid. It's what is the cost is the fair market value, or the FMV, you'll see it printed, the fair market value of that item. That's determined in one of two ways. So when you inherit something, the fair market value is determined either on the date of death, the value of that item on that day, or if an estate is involved, there could be like a valuation date, and then it becomes a little more formal where you have attorneys and appraisers involved, and there's another date. Again, that gets a little complex IRS stuff, but it's basically one or the other, and it really kind of comes down to what is that fair market value. So let's see. All right, let's just pretend grandma left me this little pitcher here, a little porcelain pitcher. Grandma paid $1 back in, I don't know, years and years and years ago. She got it when she was, newly married, early 20s. She paid $1 for this. She's recently passed away, and now the fair market value, I can go out and sell this at an arm's length transaction to somebody I'm not related to, just somebody I don't know, a fair sale for $80. the fair market value would then be $80. In a normal transaction, anybody, not related to me trying to up the price or whatever, would be $80. So you can see the difference there. So if the fair market value is 80, grandma bought it for a dollar, but by the time she passes and it becomes yours, that fair market value is 80. Your basis then is $80. So then when you sell the item, you put it on Whatnot. So then I'm like, thank you, Grandma. You saved this all these years. This is beautiful. I'm going to sell this on Whatnot because it doesn't match my decor style, right? I'm going to make some money. So I list this. I do an auction on Whatnot. They fall in love with it and they bid it up and it sells for $100 on Whatnot. So what's your profit? Is it the 100 that they sold minus what Grandma paid or minus what your basis is? That's a big difference, right? It is what your basis is. It's the 100 minus the $80. That's my basis. So my profit in this is $20. That 20 is what becomes taxable. And the point I'm making here is that there's a big difference. If Grandma paid $1 and you sold it for 100, you don't want a $99 gain. Your basis is that 80. I hope that's pretty clear. So knowing that fair market value when you inherit those goods is pretty important. And again, it really depends on there's so many factors. Couldn't even list all the different factors in this, but knowing the basis will either come from you as the person who inherited the items needs to make that determination of, okay, I got these items. This is what I think the fair market value is based on what I could buy it if I were to walk into a store or if I were to look on eBay. Undersold's not listed, and everybody knows the listeds are inflated. But what would you buy it for on a normal basis? That's kind of how you figure out fair market value. Sometimes if an estate is involved and there's attorneys, they will have to, there's like some formal documentation they do to determine the fair market value. So it really kind of comes back to just how the estate is set up and just, there's a lot of factors in there. But one way or the other, there's a basis in that item. Excuse me. I need some water. All right. So, okay, you got your basis. You know what it is. You know how much this is kind of worth to you, right? Where does it go on your tax return? What do you do with it? Because you're selling it on Whatnot, right? You're selling it in the mix of your normal business stuff. I just have these items over here that I bought as inventory, but I have these items over here that I inherited for Grandma, I'm also selling all in the same auction. Your buyers don't care. Whatnot doesn't care. You're the one who's responsible to know which is which, right? But what's going to happen at the end of the year? Whatnot's going to send you one form saying, hey, here's all the money you made on Whatnot this year. Whatnot's not going to send you a form saying, you made so much money from your business transactions and you made so much money from your the stuff you inherited from Grandma. They don't care. So that's one where we go back to record keeping, and we're going to talk about bookkeeping and record keeping in a second, proves why that's important. But it's up to you. So you get this 1099, says you made all this money. You then need to say, okay, so say I made $15,000 from Whatnot. That's what they tell me on my 1099K. 10,000 of that was business. That's going to go on my Schedule C. The other 5,000 came from my inherited items. Those go on your Schedule D. It's a different form that you report those on because it's taxed differently. So it goes on to a form, it's called 8949, which flows to your D. That's what you ultimately see. And not to get bogged down in the form names. Again, this is where an accountant will help you out. But it's taxed differently. And that's, I think, the main kind of driver here is you keeping those records and knowing Whatnot's just going to send you, Whatnot or any other platform, that 1099K. They can care less where you got your inventory or if it is inherited or you bought it. And it's up to you to know. And then, if you're doing your own taxes, to know which form to use. Or if you hire somebody to do your taxes, to relay that information to them on which, hey, this is inherited stuff. This much money came from inherited goods, and this much was actual business goods, because you're going to be taxed differently. The amount of loss you can take is handled differently. So that's why this is so important. Let's talk about collectibles here. I said I would mention it. So we've talked about what Grandma gives you. I get the feeling that I can't use TurboTax anymore. You can. They actually TurboTax and those types of tax softwares have come so far that they'll actually walk you through it. What you need to do is you have to have the knowledge on the front end, which just being here and learning a little bit about it is showing that you're getting that knowledge. And it comes back to bookkeeping. So we're going to talk about like just knowing that difference, knowing that when Whatnot sends you, Whatnot, eBay, Macari, Poshmark, whoever it is, sends you that 1099K, and you knowing, hey, on this platform, I made this much from my true business and I made this much from my inherited items. So now I know which way to fill it out, because those tax softwares, TurboTax, what is it? There's a bunch of them out there. They will walk you through and they'll ask you, did you sell anything that has a capital gain? Well, grandma's stuff that I inherited, that's a capital gain. Oh, wait, that triggers that. Yep, I have this $5,000 in sales. That was capital gain. So I think you can. I still think you can do it. I do, depending on the complexity of the situation. I always recommend to at least go make a friend who's a CPA or accountant. I don't do taxes for people, but I have a lot of people who call me up and just say, hey, I don't understand this term, or they're asking me this. Can you help me, walk me through this? And I can do that. I mean, I'm allowed to, answer some simple questions and help out some friends. So that's what I would suggest. If you're going to do it yourself, because you can save a lot of money doing it yourself, just be knowledgeable and have somebody on standby to give a phone call to, or hire somebody. And there's a great difference of price ranges too. You can go to H&R Block. You can go to, Liberty Tax. I'm sure there's different ones around the country. They're great. I know sometimes these places get a bad rap, like they're the quick flip them around and just try to get these tax returns out the door. Actually, they're not. H&R Block, I used to work for them for years during my career. So I just see a question come in, I'll answer it. I'm just going to finish on the H&R Block. There's actually really, really, really knowledgeable people there. So I wouldn't shy away from using those type of services if you don't really want to hire like a CPA that you're going to have year round. And I actually worked at H&R Block as a CPA, and I just took on the harder taxes that would come in. So cases like resellers and stuff are the ones I would do instead of doing just your general 1040s. Let's see. Capital gains is profit after taxes. Not necessarily. Capital gains is just a term on how you're going to be taxed. Capital gains, could I use H&R if I don't have to account with, yeah, you can use H&R Block. You don't have to have an account with them. You can just walk into one of their shops and use it. And I think they also have an online software that you can just kind of like a cloud-based, you log in and can do your taxes like a TurboTax. Going back to capital gains is just a name of a type of tax that you are going to be charged. So you'll typically hear the term capital gains associated with stocks. So when you invest money in the stock market and you either make money or lose money, that's where you typically hear capital gains tax applied to. However, the same form that you use for like your investments, your stock and money type investments is also used to report the inherited items that you sell. It's just a type of tax. Capital gain, they have specific rates. I mentioned earlier 0, 15, 20% are the specific rates, whereas your regular income tax based on your earnings and your wages and your business taxes have a little bit different tax rates that apply to it. So it's still all reported. It's not before or after tax. It's just a type of tax that you're paying. Let's see. Let's move over to collections or collectibles. So collectibles, everything I just said about how you account for your inherited items goes to your own collectibles. Same type of concept. So let's say this scenario. My whole life since I was a little kid, I loved coins. I've been collecting coins forever. I have this massive collection, and you know what? I'm on Whatnot now. My collection's overruling my life. I think we need to sell some of these coins off. Okay, that is considered a collectible. They're mine. I've had, since I was a little kid collecting these coins. I'm now close to retirement and I want to sell my coin collection. That's a collectible. That's reported in the same manner. The IRS actually lists out what they consider collectibles. But wait till you hear this list. It's a little funny. So let's see. I actually wrote it down so I can tell you exactly. And before I tell you the list, collectibles, your own personal collection that you're selling, so these things that whether you've been collecting for 10 years or your whole life, these are taxed at 28% tax rate. One of the highest tax rate there is what you're going to pay for your own collectibles selling those things. And here's what the IRS considers a collectible: art pieces, rugs, antiques, stamps, coins, wine or other types of alcohol. Then they've recently added on musical instruments and historical objects. So how many of you are sitting there saying, I collect something in there? I mean, I collect like vintage items. That can fall under antiques or historical items, right? A lot of ephemera could fall under historical items. So a lot of these things that most of us as resellers, we like to collect ourselves are considered collectibles to the IRS. But here's the kicker. Artwork, yep. But it's not, it's still a collectible. Art. It doesn't say that it has to be old. It just says art. So you can collect all modern art. It's a collectible. But here's the thing that makes me laugh about the IRS. The very last item on their list, it says, or any other tangible personal property specified by the Treasury. So basically they're saying all those things we just listed plus anything else we want to add in there. So let's think about, if you collect it, if it's a true collection and then you go to sell it, it's probably a capital gain. For example, I have the perfect example here. This isn't on the list, but this is, to me, like the first thing that came to my mind when I was reading this list. I have a good friend of mine. We've been friends 25 years. He's a huge Mets fan. And when I say huge, I mean huge Mets fan, like fanatic. He has a Mets collection that is so large that I used to help him go through an inventory once a year. Like we would go through every jersey, every card, every ring, pendant, you name it, and complete this complete inventory because he actually has it insured because it's such a huge collection. There's nowhere in here in the IRS list that it says sports collectibles. But this falls into their catch-all, any other tangible property that's a collection. So, my husband says that we need to run a little giveaway really quick here. So let me just take a quick break and I'll create a little giveaway. Oh, thank you so much, Evermore Cottage. I appreciate that. Let's see here. Wow, they make you do like more. I don't know, for some reason I feel like when I'm doing like the fast entering of things, it's like not fast anymore. I think Whatnot changed something. All right, here we go. We're just starting this little giveaway. This is just one of our little Zoe's Treasures ducks. We have these little soapstone ducks, so we're going to give that away. I just threw it up there. So go ahead and enter that, and we'll send that out to you. But, okay, let's get back to collectibles. So the Mets collection, if he were to sell that, that would be a collectible. So, I mean, I'm sure you guys can think about some of your stuff. Let's see. I also collect beer tap handles. I sell them online, and the IRS will tax me 20%. If they're reported properly, yes. So if you collect them, they're part of your own personal collection. While the IRS doesn't necessarily say beer tap handles, it is a collection. So yeah, you should report those on Form 8949 at the end of the year and be taxed on them. So the IRS is going to get their money. At the end of the year, the IRS is going to get what's owed to them. But I'm going to go back to what I always say, and I think I have said this every single time I do this talk show. Paying taxes isn't a bad thing. It sucks. Trust me, I don't like it any more than the next guy. But it's not a bad thing. You're only going to pay taxes because you made money. If you do not make money, you don't pay taxes, right? So what's the other side of that? I'm not making money, then why are you doing this? So I try to console myself in the fact that, yes, I don't like writing this check for taxes, but you know what? The only reason I'm writing that check is because I made some money. It's like when you have a great show, and this is what I always equate it to, you have a great show, you made all these sales on Whatnot, man, you were on there for 2 or 3 hours and your sales, best show ever. And then the show ends and you print those labels, and that label machine is going and going and going, and you're like, oh my gosh, I'm going to spend the next like day packing. Yeah, but you had a great show. How much money did you just make? So for all the good, there's always that kind of offset. So that's how I try to think about taxes. Super expensive, yes. So let's see. So we talked about what collectibles are, inherited items, how to know that, your basis. And when I was reading on the IRS website, it was so funny. One of the things it says is, knowing your basis, make sure you're doing good bookkeeping. And I'm like, interesting. What does the IRS have to say about good bookkeeping? And it's just the general stuff. So I actually made a list of 10 things of why you want to keep good records. Like, why do you need to know what your basis is, know how much you paid for inventory, know what your expenses are? So we're going to run through those. And again, if you guys have any questions, feel free to throw them in there, and I will stop and kind of divert and answer the questions. But 10 reasons why you need good bookkeeping here. Maybe by the time I get to 10, you'll be convinced if you're not already doing it. 1, to monitor the progress of your business. Pretty simple, right? Am I making money? Am I losing money? How's it going? So that's a pretty kind of a given, right? Number 2, to prepare financial statements. Most of you are probably like, I don't prepare financial statements. I make my money, I do my taxes, I go on my merry way. That's okay. You don't have to. There's nothing saying you have to prepare financial statements. But what happens when your business starts growing and you want to take a loan? The bank's going to ask for financial statements. Or another typical situation, you want to go buy a new car. Whatnot makes up a good chunk of your income, if not all of it. For me, it's a side business, but it's a decent amount on the side. And you want to include that income when you're applying for your car loan. You're going to have some type of financial statement to prove that income. Or you go to buy a house. You have to prove your income. So there is a need to prepare financial statements eventually. And so I'll just do my little plug here. Next month, that is going to be my kind of main topic, is basic financial statements. Just very high level, basic financial statements when you need to get by with something, but it's not really something that you want to do on a regular basis. That's next month. Number 3, to identify your sources of income. You may think, oh, that's really easy. I know where my income comes from. I sell vintage decor. Okay. Or I sell clothing. Fine. What about knowing which clothing or which vintage decor sells the best? I can look at mine, and I have pottery, I have some glass, I have miscellaneous household, type items, I have primitives. Which one of those makes me money? Knowing that will help me when I go to buy stuff, right? I love antique, like big pictures and matching glass sets. They sit on my shelf forever. I have the hardest time selling them. They're gorgeous, they're beautiful. But I can't tell you the number of times that I've gone to buy one and in my head thought, oh, that's not going to sell very well. I think I'm going to pass this time. And let's see who's our little giveaway winner here. LD Pell? Congratulations. We're going to send you one of our little Zoe's Treasures ducks, and I'll probably include another little surprise in there for you. Thank you for coming to the chat show today. I appreciate it. So knowing your sources of income will help you in your sourcing of what sells and what doesn't. I mean, I think at least my goal is to buy items that aren't going to sit on the shelf for a long time. I want to turn it around. I don't want to have to show the same item 10 times and wait for the right buyer. I want to buy items that I know are probably going to sell within a show or two. And that doesn't apply universally across the board to every item, but for the most part, right? So knowing, identifying where your income's coming from, what is selling, will help you source better. So that's a reason to keep proper books. Keeping track of expenses. So that's the other side of the table here. How do I know what I'm spending my money on? What to cut back on? What I can spend more on? If in business, basically, if you want to make more money, there's only 2 ways to do it. Literally only 2 ways to make more money. Make more sales or spend less money. And that's the same in life. Think about your own personal household income, and you want more discretionary money at the end of the year to go on vacation, right? So what do? Figure out a way to make more money, or you figure out a way to cut your expenses. Same thing in business. It's not like a big rocket science, difficult thing. It all works the same. And this is part of the reason I do these shows, kind of diverting here, sorry, is that people start talking about business and, oh, LLC this and S Corp this. It's not that hard. It's really simple. If you think about how you manage your household, all those same principles pretty much apply. You just need to know a few more technical terms. That's it. So keeping track of your expenses is one way to make more money because you can reduce your expenses to have that profit margin be a little bit bigger. But also knowing, can I get a better deal? So for example, personal example, let's see, real quick, do you think it's worth doing the LLC? I feel like it's an extra expense. Oh, love that question. Favorite question ever. So let me put my thought here on hold and I'm going to answer that. All right. An LLC, nothing wrong with it. There are legit times and circumstances to have an LLC. And I would suggest that you find your CPA or accountant to have that detailed thing to really look at all of your facts and circumstances. But at a high level, it starts with who's running your business or who makes up your business. If it is just you or you and a spouse, and you're saying, okay, it's me and my husband, I'll use myself for an example. Me and my husband, we do this whatnot thing, making decent money. We don't have an LLC. Right now, our taxes, for tax purposes, we file a tax return on a Schedule C attached to our 1040. The only reason you're going to do an LLC is one of two reasons, for tax purposes or for legal purposes. That's it boils down to it. Now, there's a lot of little things that flow into those, the decision of tax or legal, but for legality purposes, you would create an LLC to have separate insurance, to separate yourself personally from the business. Why would you need to do that? If I'll take just use myself as an example because it's easiest. Everything is run out of my home. I have inventory that's stored in my basement. I'm sitting in an area of my basement right now. My homeowners covers the amount of inventory I have. I don't have an excessive amount. I don't need separate insurance. I don't have a storefront where people are coming and going that may fall and slip and hurt themselves. So I don't need liability insurance. I don't need to separate myself from the business. There's very, very slim chances that somebody's going to sue me in me doing whatnot, in me doing online sales. So I don't think, for legal purposes, for me, I don't need to separate myself and have a personal and a business, like personal and an LLC. Okay. So legally, you've got to think, is there a reason to separate your personal from a business? And that really, there's not a right answer. It really depends on your facts and circumstances. If I had a storefront, I would absolutely separate my business, because then I'm looking at a lot more liability. And if somebody were to sue me, I want to make sure I have that barrier where they can't come after my home and my car and my 401k or whatever they may try to come after. But I'm not in that situation. So that's illegal. The other side of it is for tax purposes. An LLC as a partnership would be taxed on a Form 1065, I want to say off the top of my head. However, that's only if you have an LLC with multiple members, with more than one member. You and your spouse are considered one. That's not multiple. So when I say multiple members, I'm talking about person A and person B over here, maybe even more. You and your spouse are considered one for tax purposes. So if you're single or you're married and you're filing joint, it's like you're one person. So if you are one person and you have an LLC, that is considered a single member LLC, and you file your tax return on a Schedule C, the exact same way you file your tax return if you don't have an LLC. So for taxes, there's zero difference. Now, there may be some other easier to set up payroll if you were in that. Maybe you had employees. So there's maybe some circumstances that might play in there, and that's where I say go and get, a CPA or an accountant to kind of look at your whole big picture and walk you through it. But it really boils down to two main things. Do I need to separate myself legally? And do I need to separate myself from a tax purpose? And if you're a single member, a single person doing this, an LLC tax-wise is going to look exactly the same. So to me, that's not a reason. So hopefully that kind of gave you a little more information there. So let's see. Oh, let's go back to keeping track of expenses. Real life example, one of the reasons why you want to keep track of expenses, and we're doing, if you've just joined, we're doing the 10 reasons for good bookkeeping here and kind of giving you examples on each. And we are number 4, keeping track of expenses. I've been buying my tape at Sam's Club. You get like 8 rolls for 20 something dollars. I just realized that there's an online store that I can get like 30 something rolls for 20 bucks. So keeping track of expenses, that's one of the reasons I'm looking at it. Well, I can reduce my expenses. I can get more for my money. So, and I'm sure you guys can think of reasons in your own, when you look at expenses like, oh, I need to reduce cost here, I can make more money. Or maybe you're looking at, just buying in bulk. Maybe, okay, well, I spend individually this much. If I buy in bulk, I can save a little bit. So that's kind of where that goes. Number 5, keeping track of your basis and property. We just had a whole discussion on basis, on why you need to know the basis, your fair market value, how much you paid, or what that market value was when you inherited a piece of property. If you don't know that starting point, you don't know what your profit is. If I sell something for $100, but I can't prove, I have no record of what I paid for it, guess what my profit is? $100. But if I know my basis is 50, now my profit is only 50. You're only taxed on your profit. Okay? Let's see, another question. Right now I'm trying to sell stickers, but I have no idea where to price things. Some people go as much as 3 each, some go 25 for 3. Pricing is crazy, isn't it? Totally. I think that's every reseller's challenge is pricing. I think you need to find what works for you. How much did you pay for it? To begin with, what is your basis in those stickers? How much did you pay for those stickers? Are you willing to sell them and take no profit? So if you paid $1, do you want to sell them for $1? If you paid $1, do you want to sell them for $2? So let's say if I paid $1 for a sticker and I'm going to sell it for $2, now I need to deduct my whatnot fees off of that. How much am I making? So you kind of got to think along those lines. Whatnot, it's tricky. I mean, whatnot's a little bit different because we do auctions, right? I mean, you have your, like the storefront where you can just price it, say this is $10, buy it for $10. But you also are doing auctions, and that's a gamble. I have been on my Wednesday shows trying to start everything at $1 on Wednesdays. That's a huge gamble. Let's see. Basically, my basis is tiny. I can sell for $1 and for $1 and make 90%. Well, so then now you know at least your minimum is $1 and go from there. The next question I would ask is, what is the market going to support for your type of sticker? Because I'm sure there's a lot of variables in the types of stickers, the quality and such. What is the market support? What are people really going to pay for it? And what somebody pays on Whatnot for your stickers may be different than what they're going to pay on eBay or Mercari or Poshmark or whatever these other sites. I don't know if they sell stickers, but just as an example. So what does that market support? And it may be a hit or miss. This is why good bookkeeping will show you that. So, I mean, if I were in your case, I think everybody kind of does this. When I was a new seller, I played with it. I'm going to try selling these things, these type of items for this much money. I'm going to try to sell these. And if they didn't sell, I would come back and maybe lower the price. Sometimes you have to increase the price. It's a hit or miss. It's really what works for you, looking at the market, looking at where you're selling it. You can go to different parts of the country and the same thing. Like I was just in New York last week. My normal Starbucks here cost me like 6 something. I went to New York, it was 9 something. The exact same caramel macchiato. Like a venti caramel macchiato, $6 where I live, $9 in New York. So I think, we went to El Paso recently too, completely different price there. So looking at where you're selling it, how you're selling it, what platform you're selling, and you just may have to play around with it. Let's see, my main concern is the market support. Not sure if people will bite even for $1. And they may not. I've listed things on my, like in shows, just kind of like in the buy it now for $1, things that I was sure, I'm like, oh, people are going to buy these up. Didn't sell anything. So that just, I think that kind of goes back to your business, setting up your business and figuring out what the market wants, watching trends. And having the right buyer. Oh my gosh, my husband just said this to me, the right buyer. This is a little off topic from accounting and bookkeeping. This is just my own personal experience on Whatnot, especially for anybody who's new. Don't get discouraged. I have had shows that I've had 30, 40 people in the room. made a great money, and I'm like, I end the show and I'm like, wow, if every show could be like that. And then I had a show yesterday. I made $30. That was it. $30 is pretty low for my average on shows. It's having the right people in the room. I mean, you figure you may have 10 or 20 people in the room. It's not like you have a storefront where it's just there all the time that people are coming and like they're at an antique mall. What happens in an antique mall? You have people looking for specific things. You never know. Like with my 20 or 30 items I put up there for auction, I don't know if the right people are going to be in my room at the right time. It's a crapshoot. Let me see. The bin is a trap, I think. Your real value on Whatnot is live. People coming in constantly looking for giveaways, looking for deals. It's a hit or miss. And I know this is a little off topic, but since the chat's talking about this, I'm going to keep going with it. I'm a firm believer in the bin. But there's other people who are super successful that don't have bin items. So I think it's what works for you individually on Whatnot. Green 13 is a perfect example. Love watching Green 13, love going to Green 13 shows. They don't do bin items. They're wildly successful on Whatnot. They have a certain type of selling style and process that works for them. For me personally, almost in every one of my shows, probably at least a third of my sales are my bin items versus what I'm auctioning. Let's see. Evermore Cottage says, if you make the right stickers, your personal design, I can see 3 if you're... Great advice. Absolutely. And I know Evermore Cottage, you have stickers, right? I'm pretty sure you have specific stickers that are they're popular. People love them. So, yeah, it's really kind of figuring out that market, and that's the hard part of business. But the whole bin thing, totally individual. I love it. It works for me. May not be everybody's style, and that's kind of what's great about Whatnot. You kind of do your own thing and you build your own brand on Whatnot. That's one of the things that really attracted me here. When I do sell on some of the other sites, and I feel like I'm just another number or seller there. And for me, on some of the other sites, I feel like it's just the luck of the draw if somebody happens upon my listing. Where on Whatnot, I actually feel like I can try to sell and do things more my way. So, Pottery Sister, yes, we do the pottery shows. Love pottery. So, all right, I'm going to go back to my list. We stopped at number 4, or number 5, keeping track of your basis. So knowing what you pay is important so that you're only claiming the right profit to pay taxes on. Number 6, prepare tax returns. Necessary evil. We've been talking about that. But number 7 is to support what's in your tax return. So not just to prepare the tax return, but God forbid you get audited, you need to be able to support that. You need to say, nope, here's what I paid for these items. This is why my accounting is right. The chances of getting audited depends on your income. Historically, it's more people who make over $400,000 a year are audited than under $400,000. But that doesn't mean just because you make under 400, you'll never be audited. Trust me, I make well under that, and I've been audited myself. What should I expect to do? What should I expect to withhold to pay at the end of the year? Great question. Let me answer that. And then I see Evermore has a cottage. So Evermore has a cottage. Listen to me, I can't talk. Evermore Cottage has a question. But the first one, what should I expect to withhold to pay at the end of the year? There is no magic formula in that. What I would suggest as a general rule of thumb is you figure out what you paid last year. And if you were in the 20% tax bracket last year, then I would expect, and everything, you were in the 20% tax bracket last year, estimating, and everything else in your life is the same. The only variable is your Whatnot business. If you're going to be within about $1,000 of that same taxable income, then you can expect to have about the same taxes due. If you're going to be over about $1,000 more from that taxable income that you had last year, and you were in a 20% tax bracket, then I would prepare to pay approximately 20% of your new income. It's not a specific formula, because again, at the end of the day, what you're being taxed on is the profit less the expenses. So there's a lot of variables that go into it, but I would start with whatever your tax bracket was last year, expecting to pay that again this year. Let's see. For those of us, if we are tracking inventory, does it make sense to not itemize it and just do the whole cost overall, like if I go to Goodwill. That depends whatever works for you, but just do it consistently. So for me, when I go to Goodwill, I itemize it by item because I know specifically what each item cost me, $2.99 or $3.99. So I put it into, I use Vendoo as kind of my main inventory system. It works for me. And I put the price in there. So then I know when it sells, the sales price goes in there. I can print a report. I know what I bought it for and know what I sold it for. No matter what platform it's on. That's one of the reasons I like that one, because it helps me to keep track across platforms. However, when I buy auction items, I usually buy large lots of goods, and then I will take my total auction price. Say I spent $100 at auction and I bought, 20 things, then I know it's $5 per item. I divide it across the board. As long as you're consistent in your method, then you should be fine. So you got to find what works for you, and how you're purchasing. For me, using auction items, when I buy that much, it's hard to know each individual price. So I do, like a cost averaging across that. Let's see. When I did contracting, I had to pay quarterly. Is it different selling on Whatnot? I don't know anything about business expenses and profit. Okay, very good question. We actually talked about this on the last show, and I'll bring it up again. So let's go back to your basic concept of how you pay taxes. Let's start with, I work for somebody else. I'm an employee. My employer, and I do this, I have a full-time job. So in my full-time job, my employer looks at what they pay me. They look at my salary, and they take out payroll taxes, federal income tax, and then your Social Security, Medicare. They take it out, they submit it for me based on the income, based on what they're paying me. I don't have to worry about it, right? I fill out my W-4 to show how many dependents I'm claiming. They look at the IRS tables. It's all calculated. They submit my taxes. I'm usually good at the end of the year. That's the easiest scenario. Now, come selling on Whatnot or doing any other type of business, you're making money. Nobody's remitting your taxes, right? And you made a good point about quarterly taxes. If your taxes, you expect them to be $1,000, your taxable income. So when you get down to that line on your 1040, I'm trying to think what line it is. There's a couple different forms in the, like row 20 or 30, somewhere in there. You get down to the taxable income line. If you expect that taxable income line to be $1,000 greater than what was on your last return, you should be paying quarterly taxes. Because the IRS, if it's over that $1,000, and you wait and you don't pay quarterly taxes, the IRS is going to say, you should have been giving me money earlier. Now I'm going to charge you a penalty for holding on this money till the end of the year. So it's knowing, you know what, I'm going to make more money, a lot more, and it's not just your profit. Again, this is why your bookkeeping comes so important. It's your revenue minus your expenses. It's that bottom number. Your profit is what you're taxed on. So if my profit is going to be more than $1,000, I probably want to pay quarterly taxes. Let's see. The best software. I said I use Vendoo, Vendoo. I might not be pronouncing it right. It's like a cross-listing software, but it also will track your inventory pretty well. I'm impressed with it. For my uses, I find it works great. Yes. And then what is the best software for bookkeeping? There's so many out there. I don't necessarily think you need a software. I mean, some people find it easier. So you have like QuickBooks. There's a few others that I've had people in shows before mention that I had never even heard of. If you just Google bookkeeping software, even reseller software, I know there's some specific for like online resellers. All of them are made pretty much equal. They do the same thing. They track your revenue and they track your expenses. Some have more bells and whistles than others. I use Excel. I use a basic Excel spreadsheet. At the end of the day, all you need to know is the cost of your inventory. You've got to keep your cost of goods sold. So how much are your items? What's your basis? How much are those items costing you? What did they sell for? What is your profit? And how to track your expenses. And mileage, don't forget mileage. That's an actual expense, but I have a separate spreadsheet. I just track on, how much I drive. I find it easier for me personally to sit down once a month. I keep my receipts, make notes as I need it in a calendar, and then once a month I sit down and put it in a spreadsheet. I just like to keep things simple though. That's what works for me. Some people, some of these online softwares are wonderful and they have like apps that integrate with your phone. So if you're that type of person who's like on your phone, wants to like enter a receipt as you go, maybe a software works for you. I don't think there's any that are like better than others. I think they're all pretty much made equal. Some just have more bells and whistles. Do you buy on eBay or whatnot? If so, how do you capture the receipts? So you can print a report, you can jot it down. I mean, you know your cost in there. I can do a screenshot. So when I do, and I do buy on Whatnot, I don't normally buy on eBay a whole lot, but I'll buy from other people on Whatnot for reselling purposes. So I'll jot it down, just like I'll write it down. You can also just look on Whatnot and see what it is, and take a screenshot if you need a backup for something. Oh, my husband's saying he buys a lot on eBay, not to resell, but he just buys a lot. He goes, some eBay sellers actually send receipts in the boxes. Does that pass for? It does. Long as you have documented what you paid, it's fine. So think about this. When you go to a garage sale, and I know a lot of resellers will pick stuff up at garage or estate sales, you normally don't get a receipt, right? It's normally, oh, here's my $10 cash. Thank you so much. See you later. I come home and I write it down. Garage sale, such and such a date, in this city or general location, purchased 6 items, fair market values. I was like, I just create a little note. This is what I did. And that's fine, long as you're consistent about it. Now, if you have hundreds of thousands of dollars sales and all you do is garage sale and it's like all just made up stuff, I mean, you got to think about how legitimate it is. If you're the IRS coming and looking, like, I know me, like just the way I do things, I buy at auction, so I get printed receipts from there. Goodwill, I get a printed receipt from there. So an occasional garage sale or estate sale, that's not a big deal. But if that's all I had, I may ask for more written receipts, maybe even carry a receipt book in, have somebody at the estate sale sign. If that was like 100% of what I did, I may try to make it a little more legit. But if it's an occasional one or once a week, right, just make a note. It's usually fine for auditing purposes. Yeah. Let's see, where were we? We were talking about, supporting what's on your return, which is great, kind of what we were just talking about. Number 8 on why you want to keep good. Oh, you're so welcome. Thank you for being here. I really appreciate it. Number 8 on why you want to keep good records is making forward looking or current. Thank you so much. I appreciate that tip. Making forward or current business decisions. If you don't know how your business is doing, how do you make a business decision? If I don't know financially, because at the end of the day, most of us, I know some people just do this for pure enjoyment. Most of us, we're trying to make a buck, right? We want to make a little bit of money for whatever purpose. So at the end of the day, how do you know how to make good business decisions if you don't know how much money you're making, if you don't know what your income and your expenses are? So in order to make good decisions, what type of product should I sell? What should I buy more of? What should I buy less of? Should I do ads? Should I promote my shows? So keeping records helps you make those decisions. And then on the other side of that, my number 9 reason, analyzing your historical decisions. Hey, I love pottery, but you know what? I see everybody's buying Fenton. I'm going to go and try to source a bunch of Fenton and sell a bunch of Fenton. 6 months down the road, I may want to take a look back and say, how did that sell? Was that a good business decision? And so using your records to help support, okay, I made a good decision, or no, I didn't. And it's okay. You make a bad decision. It's just a bad decision. It's not the end of the world. You change it and move on, right? But knowing, so your records will help support analyzing what you've done. And then finally, budgets. Everybody's favorite word, I know. Everybody loves budgets. I do because I'm a geek. But you cannot create a good forward-looking budget without knowing where you've been. Unless you're in your first year, and your first year is just good estimated guesses anyways. But moving forward, when you do a budget, there's some amount of estimation, but there's some amount of, I spent X number of dollars each month on shipping supplies. So I could probably, as long as my business stays about the same, I can expect to spend that much this year on shipping supplies. Or, hey, I want to grow my revenue by 10%. Okay, if I'm going to grow my revenue by 10%, what kind of expenses are going to increase because of that? Shipping supplies, the more I sell, the more I ship. So I'm going to need to increase my shipping supplies, expect that expense. Maybe mileage because I'm going to be driving to the post office more often, whatever it may be. So just budgeting purposes, you need to know where you've been, which all relies on good records. So that's my 10 reasons why you need to do good bookkeeping. Does Vendoo Net connect? Yes, not connect. No, it does. Vendoo connects to Whatnot. It's one of the reasons I use it. There's actually a brand new, I don't want to say brand new. There's another platform out there that I have been, I'll go back to the first four. Hold on. That I've been considering, but they don't connect to Vendoo. So I'm not doing it until they do, just because I don't have time to list on Vendoo and then go and list on this other site that's starting to be popular, but I just don't have the time to list on both. But yes, Vendoo, they hook up to, I use it for 5 platforms, but they have more than that. They have a lot more. Now, how they connect to each one is a little bit different. So sometimes like your sales, when you make a sale, it automatically like updates it on all the other platforms. Like it'll remove the item, but there's certain platforms that like that, it's the connectivity isn't quite there yet. So they still have some growth to do, but yes, Whatnot is one of the main reasons I chose it. My first 4 points on why to keep good record keeping. I'll run through them really quick. All 10. Here's why you need good record keeping. Monitor the progress of your business. Prepare financial statements. Identify sources of income. Keeping track of your expenses. Keeping track of your basis in your property or your inventory. Preparing your tax returns. Supporting your tax returns. Making forward-looking or current business decisions. Analyzing your historical decisions, and doing budgets. Those are my 10. Let's see. Oh, thank you, Evermore Cottage. Thanks for letting me know that. All right, so those are my 10 reasons for good bookkeeping. Let's see. I had a couple more little notes here. Let's see. What was... Oh, big one. I think we kind of touched on this last time, and this will be my last point of the day. We're hitting a little over an hour here, and I do like to try to keep these. It's a heavy topic to go too long with. But 1099Ks. So everybody knows that 1099K is if you make a certain income limit on any platform, you will get a 1099K at the end of the year. That 1099K tells you how much you made on that platform. A copy of that also gets sent to the IRS. So eventually the IRS matches what they get up with your return to make sure that you're being honest, right? What if that 1099K is incorrect? What if and I think they have to be out by the end of February. I'll double check the date. I'll have it for next time, but I'm pretty sure it's the end of February. Like Whatnot is required to send those out. What if you get your 1099K from Whatnot? You've been keeping good records, and you know you made $20,000, and Whatnot tells you you made $30,000. Whoa, Whatnot just told the IRS that you made $30,000 and they told you, and you're like, no, I only made $20,000. That's a big deal, right? So what do? First thing you do, contact Whatnot, see if they will correct it and reissue it to you. Always the first step. If Whatnot says, nope, this is what our records show, we're not going to change it, whatever, that's okay. As long as your name and your social security number is correct on that 1099, you can make the adjustment for the incorrect amount on the Schedule 1 on your tax return. So don't like get, worried or whatever if it's wrong. Usually if Whatnot makes a mistake, eBay, whatever, they will reissue it. I think in my whole career of being a CPA, I've only ever come across once or twice where the person issuing it refused to correct something that was wrong because they don't want to get in trouble either. They can get their hands slapped for being wrong. So contact them. They'll usually fix it. If they refuse to fix it, there's a way for you to fix it. So,
follow us on YouTube.
Show our YouTube. If you ever want to go back and watch our shows again, we do stream everything to YouTube. So please go and watch them there.
Follow us on YouTube.
Same name, Zoe's Treasures. Well, we're Zoe T here, and I was going to change our Zoe T on Whatnot to Zoe's Treasures, and then I'm like, I'm so far into this, everybody knows us as Zoe T, we're keeping it. But if your 1099K comes incorrect, usually it's okay, don't worry about it. But this goes back to keeping good records. How can you tell Whatnot that their 1099K is incorrect if you haven't kept good records yourself and know that, right? All right, so that's my spiel for today. I don't see any other questions right now. So I'm going to go ahead and end the show. We're going to go raid somebody. I'm going to go find somebody in our vintage decor category to raid. And you guys, my husband says he wants us to go raid into somebody in the Battle of the Best. That is today. Love the Battle of the Best. So I'm going to see if I can find those. Thank you so much for coming by. Please check us out next month. And I'm thinking about for 2025 doing some type of like fun, like financial challenge. We'll see, just to, help keep each other accountable. House cost. Oh, real quick, I'll answer your question and then I'll raid. Can we deduct house cost? Yes and no. You can deduct a home office expense if you're using it primarily for your home office. If your kid comes in and does their homework in there, yeah, that's fine. But you really need a space that is dedicated to the home business. You can deduct the square footage of that space. So myself, I someday we'll show you here, but basically I'm in my basement and I have like a curtain kind of sectioned off a piece of my basement. This is my whatnot area. This is the portion that I will deduct on my home office expense. And then like electricity and stuff too, that is equivalent to that office expense. So, my husband's like, no, I am not going to show. He's like, go ahead, turn the camera around. I'm like, no, it's a mess. Guys, they're like, oh, it's okay. And I'm like, yeah, no, not happening today. Someday. I'll show our home office someday. So yes, you can deduct, and it's on your Schedule C. There is a spot for home office on there, and it'll walk you through every step. Every now and then on these shows, I'll actually pull up the Schedule C on the computer and show you and like walk through certain sections. So watch for that. We'll do that. All right, you guys. Thank you, thank you, thank you. I cannot tell you how much I appreciate you guys coming and joining me. Have a great week and come back next month. Let's go find somebody in Battle of the Best to raid. Real quick, let me go flip over and do a quick search for Battle of the Best and see who's on because I don't even know. Battle of...
Honey, what are you doing?
Battle of the Best in shows. Let's see who is on right now. It looks like Rosie and Jess. Let's see if we can raid Rosie and Jess.